Before we start placing trades, we need to correctly identify the bias of the market. We need to do our pre-market analysis. We cannot rush into things. We need to take things slow. And if we don't have the proper understanding of the structure, we can make mistakes and we can eventually jump the gun. So it is important to correctly identify the structure before the market opens. And what is the structure for today? From this perspective, the structure is a clear trading range, because after the new session started, we traded down, we traded up, we traded down, and we traded up. This is already indicating range structure. So what I have to do, if I want to follow the trading range rules, I need to identify my key levels in form of overnight highs and overnight lows, because these important key levels will a lot of times come into play. Now, since this is a range structure and I'm trying to locate my trend lines, I know that I'm mostly going to be sticking to shortened trend lines for the most part, because why? The patterns are not reliable. And we can see that there is a downtrend working lower, break, new extreme form, and time for reversal. Uptrend working higher, break, new extreme form, time for reversal. This is a trend line rule that says after break of a trend line, new extreme is going to be formed. Downtrend working lower, break, attempt to create new extreme, and price reversed higher. Now here's the first important situation in the market we're going to talk about, and it raises an important question, because we can see that there's a little bit of a geometrical pattern forming at these lows, and I can draw my trend line like this, and it fits nicely at the bottom. But is this the ideal scenario that the price action is offering to us? No, this is not the best trend line that we can draw. Why? Because in tight ranges, we're sticking to tight trend lines. So what I did, I used this bar right here that basically started the trend, and I drew my trend line from this point right here. So I made it really tight because all of the prior trend lines are really tight as well. And I have a break, attempt to create new extreme, resistance is holding, and price is right now pushing below the EMA. So when it comes to bigger pattern as a trading range, I expect for price to go from the resistance all the way down to these lows. This is being confirmed by the strong push below exponential moving average. So what I'm going to do, I'm going to draw the shortened trend line as well. So not only I have a push below EMA confirming bearish momentum, but I also have the bigger pattern being in play, and I expect from the resistance the price to go all the way down here. We can see that this is the lowest low, and since the structure short term is downtrend, what is the high probability setup? What is the safe place for me to sell, and what is the safe pattern for me to sell? Is a second entry short at the key entry point. Two-legged pullback with the direction of a trend is a high probability setup. We have a new low, we have a first entry short pullback, second entry short. But it's formed right at the open, it's really spiky and too quick, and this is not the great thing to take just yet because it is right at the open. But market corrected a little bit, the open confusion played out, and look what happened. Price created a new high, and there was a first entry long, pullback, second entry long failure. The entire time price is below EMA, which is confirming the bearish bias. This is the new high, first entry long, second entry long. Second entry long in a downtrend, I'm betting is going to be a trap. I'm taking second entry shorts as a high probability setup, and I'm taking failed second entry long. So by the time second entry long form and the next bar in the opposite direction appeared, which is bearish, I can treat this as a failure, and this was my first trade for the day, and this was a great entry to take because I get a break of the downtrend, and I still expect, according to trendline rules, to get a new extreme, and price is pushing lower. I also treated it as a variation of a second entry short. I treated this entire leg down as a kind of like a first leg, pullback, second leg. So this is a failed second entry long and second entry short. Technically, this is a third second entry short, but I played it as on a larger pattern, 2 legs down. Now, as the price gets pushing lower, I'm still keeping in back of my mind that we may potentially reach the support. I'm still playing the trading range. This is all the information I get from the market, and if I want to follow the rules, I still expect for price to go down here. So what I can do, I can make my downtrend a little bit wider, because by this point on, price is pushing to the downside quite strongly. You guys can see price created a new low, and look what you have. New low, first entry short, second entry short. Is this the good entry to take? This is a two-legged pullback with the direction of a trend, but take a look what happened. If you're going to measure the first leg down, you're going to copy the measured move, and you're going to put the second leg down, you can see that we reached the measured move off the top. And after you reach the measured move, you can expect larger and bigger correction. But that's not the main reason why I didn't like this trade. I didn't take this trade, and I didn't like it because the body is extremely far away from EMA. You need for price to go and pull back closer to EMA, because right now the measure move played out and you're at the finishing part of the trend. So you cannot take entries just based off trend lines like this. You can take entries based off trend lines when it comes to bigger patterns, but not these shortened patterns. You need to draw the shortened trend line to the upside because you want to be able to recognize when it is okay to sell. Now, as I'm watching the second entry short fail, and I'm looking at the price creating a failed second entry short, I get a double trap. And take a look how great this entry looks. EMA keeps holding price, 2 legs up on a larger pattern. Everybody went short too early, long too early, they got trapped, and this was my second trade for the day. And notice what happened, I got stopped out, and that is okay. There's nothing to think about, there's nothing to overthink. I still like the trade. I could have avoided it, being more aware of the measured move, keeping the trend line tight, because in trading ranges, you're supposed to be playing the tighter channels. But I still, if I look at the right side of the chart like this, I still really like this entry, and there's nothing to think about. I just have to brush it off, and market is going to offer me a lot of opportunities to make it all back. At least that's what I'm betting on as a trader. Now I see that the price created a 2 legs back to the upside. So at this point on, I'm not looking to go long. Take a look what is happening. We are in the middle of the trading range, but since the 2-legged pullback played out, I expect for price to give me first entry long, second entry long failure, but there is no great signal bar for me to take a short. So since we are in the middle of trading range, I'm not going to push anything. There is no clear bias, no clean setup, and I'm just sitting and waiting for price to develop a clear structure. And notice what is happening, and this is important. If I zoom out like this and I ask myself, what is the bigger structure? The bigger structure is a trading range. Is it a healthy trading range? It's not, because if you guys take a look, price is failing to go from the resistance all the way down to the support. We failed here, price pushed higher, and we failed here again, which means that each new low is higher than the previous one. We are hovering around the middle of the trading range, and this is indicating bullish imbalance. Once the price is failing to reach one side of trading range and the other side is prevailing, this is indicating imbalance, and there's more buyers in the market. And this means that once the price is breaking above the trading range, I'm not going to be fading the breakout. Even though most breakouts of trading ranges will fail according to price action rules, the uptrend is in play. I have a bullish imbalance. I cannot take a short just yet. Even though you're quite far away from EMA, you have to wait and you have to sit. Price is going into consolidation and a congestion. You guys can see that there's a lot of bars stacked right next to each other, a lot of overlap, and traders are deciding whether they're going to pull back or continue working higher. We cannot go long here because we are so far away from key entry point, and take a look what happened. This is a trading range and this is a key level, and price, when it breaks out of key level, will a lot of times come back and test the key level. So even though I have a bullish imbalance and I'm not fitting the breakout, I still don't want to go long because there's a still higher possibility that we can pull back and test the breakout area. When we are looking at the congestion, we don't want to be taking entries. Congestions are just micro trading ranges. This trading range is the same pattern as this trading range, it's just a little bit smaller. And the way you trade congestions, you fade the breakout. Price broke to the downside and offer you a nice bullish bar. But this entry is not good just yet, because we just broke above the entire bigger trading range, and there's a high likelihood we're going to pull back and test the important breakout area. Even though we would prefer a scalp, and mainly I'm looking for price to really come back and test this breakout area, and you guys can see we're eventually pushing back down. Price created a lower high here, and unfortunately there's a micro double top which resets the highs, which reset the count. They're equal highs. Had this high been a little bit lower, this would have been a first entry long pullback, second entry long failure. But like this, it is a lower high, and this is not a strong setup just yet, but you expect for price to pull back into a trading range, and now you have a strong confirmation that this price is finally pushing below EMA. So you're, according to trading range rules, you're most likely going to pull back. All right, and this is important what is happening. Take a look what is happening. Price is failing to go and reach the middle of the previous trading range, and this is definitely confirming the bullish imbalance. By a strong rally above EMA, price offered a high low. So what is the price action rule that you're going to be following? You're going to be following bullish imbalance, and what you can do, you can start looking for trend lines that would give you idea, and it would confirm and solidify the bullish imbalance, the bullish bias overall. Now this is still a trading range structure. So this is not a strong uptrend. So you cannot just take any long. You still need to take a high probability long at the key entry point. Since the price is breaking above the trading range, and this is not a strong trend, I know that I need to be cognizant of the highest highs of the day. For that reason, what I'm going to do, I'm going to analyze the resistance and the highest high of the day. Because if I'm buying, I need to be buying at the key entry points, not at the top. We have a new low, first entry short, pushed above EMA confirming the bullish momentum, second entry short failure. So this would be a reversal pattern. But this reversal pattern is not safe to take because I want this reversal pattern as a high probability setup to form right at the EMA. And why this is a high probability setup? Because second entry short in an uptrend, your betting is going to fail. Second entry short on our way down is a high probability setup, and a second entry long on our way down, failure is a high probability setup. Okay, so right now we're pushing to the upside, so we are betting on that the second entry short is going to fail as a high probability setup. It's not at the key entry point, it's right at these highs, so you cannot force entry and you need to wait patiently for price to pull back either to this break area key level or to the potential trend line. Notice the price created a second entry long, but it is directly into these highs and you cannot go long just yet. If you go long here, you can be tempted to go long here and take the high low. Take a look how nice that this EMA is holding price, but this is a trap. Price trapped everybody going long at the very highs because people are going long at the highs. They're not respecting the high of the day. You need to buy the pullback. You cannot buy at the very high of the move. So when I'm watching this, I'm just sitting here patiently because there is no setup. Okay, and that is completely okay. The market can just be really slow. I need to, be disciplined. I cannot force entries. I cannot take entries that are not there. I cannot manufacture setups that are not there. I just need to really, not overthink it too much and just wait for price to give me a high probability setup. There's nothing to do. Just because we are day traders, scalpers, that doesn't mean we're going to be trading every single day. Sometimes the market is just too slow. And if you miss a couple of these setups, come back the next day. You don't have to be trading every single day if the market is that slow. But market is still developing and there's still a lot of time during the session. So right now, I'm playing the bullish imbalance. I'm focusing on the trend line and let's see if we can get a setup. Price bounced strongly to the upside, but this is not a good setup just yet. And notice that the price is starting to get a little bit stacked. It's starting to look a little bit wedgy, but the overall bias is still bullish. You're going to zoom out and you see that the price is still creating series of higher lows. So this is still looking like a range, but with the bullish imbalance and the bullish trend, I'm mainly focusing on longs. Price pushed above EMA confirming bullish momentum and offer us a high low. But the same situation right here, we cannot go long directly into these highs. Notice the EMA is getting flat. It's no longer pointing up. It's flat and we're swinging down, up, down, up. This is a small trading range. We broke from the top trading range from the bottom trading range to the top trading range. And you have to respect the highs. For that reason, this high low is not great and also is getting a little bit stacked. Price eventually pushed lower. And when I was watching this, it was actually tempting to take this lower high because everybody got trapped here. But there's a horrible stim at the bottom. EMA is in the middle of these bars, getting quite stacked. Not the great entry. I didn't take this trade. Second entry long formed there. And it confirmed the key level, the trend line. But notice how far away the body is from the trend line and how in the middle of this trading range it is. It worked perfectly. And I'm going to mark it because it is not a bad entry, but I just don't like how the EMA is getting into these bars. We are starting to get a little bit wedgy. Not the best entry. I really would have liked if it confirmed the trend line better, but overall bias is still bullish, so the market is pushing higher. Once the market is pushing higher like this, I cannot force entries and I cannot chase the market. High probability setup occurred, two-legged pullback at the key entry point occurred, and I cannot take a first entry longs that are far away from key entry point. Since this is a bullish structure and the uptrend got confirmed from this point on, I'm following a simple price action. I'm looking for second entry longs at the key entry point, and this is the highest point of this entire move up. So this is why I reset the count. I'm going to draw the short-term trend line. This is the new high. First entry long, and I just got the first entry long. Market didn't even offer me a high low that I could capitalize on and start buying. Unfortunately, there is no setup and you just have to watch this go without you. Market created a new extreme and I haven't given up on longs just yet because the structure of the market is a still bullish uptrend. As long as this uptrend is in play and there is no break and no new extreme, I'm still looking for longs. I'm still looking for buy opportunities. So once I get a new high, I'm going to draw the short-term downtrends. I'm drawing the short-term downtrends because I'm looking for area in the market when it's safe for me to buy. And I need to see a break, at least attempt to create new extreme so I can buy the market. So once the market is pushing higher, I'm anticipating second entry long and I get a second entry long. New high, first entry long, second entry long. It is at the key entry point. It is with the direction of the overall trend. And this is a great high probability setup. This is an easy setup that any trader can spot. But this was too fast to enter, unfortunately. And it was funny because it took 20 minutes for this one setup to set up. But once it triggered, it passed by and flown by within like a 2 seconds. So if you weren't quick, you had no chance to get in this. And I missed this trade. I tried to chase it with the limit order, but I never got filled. So unfortunately, it left without me. And this was a great, easy, high probability setup. But this is just part of trading. EMA is still pointing up. EMA is still holding price. And as I'm watching this, I'm thinking about another second entry long. I have a new high and I have a first entry long, pullback, second entry long. And since this is uptrend, I have a set of rules that I follow. So I'm going to execute. And this is a second entry long. We ticked higher, it's the reverse up, great bullish bar. I took 4 ticks on this trade. Why? Because the market got really slow. It doesn't look like that because we're doing the bar by bar in hindsight. But if you would be watching this live, this is extremely slow market. Not that many people are trading. Also, and the main reason is, I don't have enough room to the most recent pivot high. I have enough room here. If we compare it with the previous example, look how much of a room there is and look how little room is right here. So this is the main difference if I compare with the previous swing high. So I took only 4 ticks. Your stop loss still would have been safe because you keep your stop loss 1 tick below the signal bar. You would just have to ride this out. But personally, I would have got out and break even had I been holding this, because this second entry long is supposed to create a quick, easy scalp, especially after such a good momentum, because we trigger lower, it's in reverse. You're supposed to get scalped quickly. And notice how the trend is starting to lose steam. When I'm watching this and I'm analyzing this uptrend, I can see that price is failing to reach the midline more and more. We are hugging the midline here. We are not here, not here, not here, and definitely not here. There is more space, blank space being present than the price action, filling the space up. So this is telling you that the trend is losing steam. We're about to tilt over and we are in the middle of the small trading range. And even though there's a second entry long, I don't like taking this because this was supposed to work. And right now we're just going sideways. So I'm just sitting patiently here and I have a first break of that uptrend. So I'm just going to zoom out to remind myself what is the overall structure. The overall structure is a clear bullish uptrend. And right now I expect for price, because I followed the trend line rules, to create new extreme. But I need to find a situation in the market where it is okay for me to sell. So I'm asking myself, where it is okay for me to buy. So I'm asking myself, it is okay to buy now? It's not, because we just had 5 consecutive big bearish bars and we have a downtrend working lower. So it is safe for me to expect that I can get a break and new low for the downtrend, and I can get a second leg down. First leg, pullback, second leg. Only now where I get two-legged pullback down with the break and a new low, I'm safe to assume that we can resume the uptrend and get a new extreme. But I cannot pick the bottom just yet. That is not the high probability. Notice that high probability setups are two-legged pullbacks or variations at the key entry point. We are not at the key entry point. Since I'm still below EMA, I need to wait for bullish confirmation. I want to see people buying. We have a new low, first entry short. I have a push above EMA, which is confirming the bullish momentum, which is good. And I get a second entry short failure. Now I'm going to draw the shortened trend line. Notice that the bar still has bearish body, and notice that you're going long directly into top of this channel. And a lot of times you can stall here a little bit. So you need to be a little bit careful. When this small inside bar bullish bar form, this is really looking nice. So you can definitely take this entry. I probably was too much in my head, but you guys can see that it stalled a little bit. Price needs to correct a little bit so you have enough room to this trend line and price eventually pushed higher. But this is not a bad entry. I will mark it, felt second entry short. It's resuming the uptrend after 2 legs down downtrend played out, simple price action. You're not looking to go short unless you have a new extreme, and not even that, because the structure is a strong bullish. So you need to have proven trend in the opposite direction for you to start selling. As long as the structure is bullish like this, you're only thinking about buying opportunities. Price created a high low that would confirm the reversal pattern, but high low is big, stem at the top. You would have to go long above the inside bearish bar. Not the greatest market and not the greatest signal bar to buy above. Now, since we had a break at a new high, I can draw a potential trading range, because right now I expect correction. So I'm just right now sticking to the shortened trend lines, and I can see that the market is pushing higher, but by the time I get felt second entry short, we are all the way up to here and far away from EMA. Price is pushing to the upside, and since this is so bullish, this trading range is almost being completely ignored. This is mostly just a strong bullish uptrend. I'm still looking for a second entry long. I get only a first entry, cannot take it. I get the second entry long, but it's bad signal bar, cannot take it. We're starting to flatten out. EMA getting flat, we're going sideways. Resistance, support, no clean entry. Notice the price pullback, tested the breakout area of the initial trading range. New low, first entry short, pullback, hidden second entry short, you cannot take it. Market is getting far away from EMA, and right now we're correcting, and I believe, we are already way too close to the low, way too close to the close of the market. And that probably ended up being a bigger pattern, I believe, like this. It wouldn't really come into play because by this time it's already way too late and market is about to close, so you don't want to be trading. But you guys can see that the market keeps pushing higher, and this shows you that you cannot pick a top, even though you think that the market may reverse any moment. As long as it keeps pushing higher, and as long as there is no trend in the opposite direction, in the bearish move down that would, confirm the trend, you cannot be thinking about selling. You're just focusing on the buying. When you're looking at the range, you need to analyze if it's a healthy trading range or if there's an imbalance. Once there is an imbalance being formed, it is okay to start thinking about this as a potential uptrend that may develop, but still, there's a difference between bullish imbalance and a strong uptrend. And the reason is that you cannot just buy blindly with the direction of a trend. You really need to still respect the highs and wait for the corrections. And by this time, once the market broke higher right here, it was really obvious that we're just looking for easy two-legged pullbacks at the key entry point. But there weren't that many of them, but you could have, capitalized on two of these real quick. And then there was one this setup, and you can take a little bit more aggressive setups. I could have marked a little bit more aggressive setups, but I really only like marking those high probability ones. So hopefully the video was helpful, and I'm going to talk to you next time.